All right. Good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you all to our presentation of Better Strategies, Less Time, how to quickly find strong candidates for swing trading and options. Throughout this webinar, please submit your questions via the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. This webinar is being recorded, and a copy will be sent to everyone who has registered. Now, before we welcome our host, Mark Chaikin, to the webinar, I'd like to introduce Michael Amar, CEO of Wall Street IO. Micah is an expert stock and options trader with a specialization in taking complex cycle analysis indicators and breaking them down into easy-to-follow steps. Micah is most famous for writing the #1 rated Apple Investment Strategy Guide. Now, to get us started, here's Michael Amar.
Hey everybody, how's it going? Michael Amar here. And I'm so excited today for today's webinar with Mark because I always walk away with several actionable ideas I can implement right away to improve my trading. Now, over the years, swing trading has really grown in popularity. And for good reason. In my opinion, swing trading, it's the single best way to take advantage of market moves right now. However, if you don't have the right tools, you can spend forever trying to find good setups, which is why I'm extra excited today because Mark's going to walk us through his stock screener and new discovery engine, which were both designed to help you find better strategies in less time. So I'm really excited today. And with that, I'd like to introduce my good friend, Mark Chaikin.
Micah, thank you very much and welcome everybody. In today's webinar, we're going to show you how you can find profitable swing trades. And since time is so critical, less time equals more time to enjoy the profits. So a quick disclaimer, Chaikin Analytics not registered as a broker-dealer or investment advisor with any U.S. securities or state regulatory agency, and this webinar is for educational purposes only, and the examples we use are just that and not meant to be recommendations. I always like to start out by giving you a little bit of my background so you know why you're going to spend the next 45 minutes to an hour with me. I've been on Wall Street for 50 years. For 45 years, I've been using technical analysis in conjunction with fundamentals to develop rules-based strategies. I also headed up the options department at a regional firm called Tucker Anthony, where we had over 250 brokers and tens of thousands of options traders. And a part of what I learned there is going to be reflected in a key element of the webinar. Along the way, I've been mentored by some of the smartest and most successful institutional investors. Some of them were clients and some of them were colleagues. And what I learned from them, because many of them mentored me along the way, is reflected in the Chaikin Power Gauge rating, our proprietary 20-factor, fundamentally driven quantitative model. It's really the culmination of my life's work, and it's the reason I came out of retirement, because I wanted to really share something new that went beyond technical analysis, which is what many of you know me for, the Chaikin Oscillator and Chaikin Money Flow on all of your online trading packages on stockcharts.com. But I felt that particularly after the financial collapse of '08, that self-directed investors and traders needed professional quality tools, same types of tools that I had developed for institutional investors over the years. Since we founded Chaikin Analytics and rolled out our first product 6 years ago, we've been blessed with great press. Barron's called us the best quantitative site on the internet, and firms like Wall Street IO, Micah's firm, Simpler Trading, John Carter's firm, have partnered with us, and some very, very large institutions like the Paulson Hedge Funds, Soros Management, and Fidelity Investments are actually using the same products that we offer to you, the individual investor. I know we've got some advisors on the webinar, so obviously this crosses a lot of different investment styles. Now, in the next 45 minutes, you'll discover 4 keys to profitable swing trading. How to have a solid fundamental opinion about an individual stock, bullish or bearish. How to look at performance of a stock relative to the market. We'll call that relative strength. Going to look at how to measure institutional buying and selling pressure with one indicator, the Chaikin money flow. And then finally, absolutely critical, as Micah said, to profitable swing trading, entries and exits. Now, I'd like you to sort of get pensive for a minute and tell me whether you think there's something missing in your trading. Type in what you think is the key missing element in your trading. Now, yes, Michael, clearly timing is very important. Knowing when to buy and sell, yep, we're seeing all of that. Knowing when to take a loss, yes, absolutely, the missing element. Having a plan, very, very important. And here's the one I've been waiting for from Janice, focus. Focus is the key to profitable trading. So I'm going to start by telling you what I think you should focus on in 2017. Number one, trend of corporate earnings. They're rising. Number two, interest rates. They're also rising. And in a minute, we'll see that that's a very bullish combination. Third thing to focus on in 2017 is a stock selection technique, because in periods of rising interest rates, stock picking is absolutely critical. And four, having a plan. You've got to develop a plan so that you are focused in 2017. Now, here's the most likely scenario for 2017. It's playing out right now. This four-part quadrant is courtesy of Bank of America Merrill Lynch, Global Investment Strategies. And we've gone from a very, very bullish period of 5 years of falling interest rates and rising earnings subsequent to the financial collapse of 08 to 2015, which was extremely challenging when the energy stocks and small caps were very weak, where we had falling interest rates but falling earnings. And then as we moved into 2016, in the third and fourth quarter, we saw earnings turn around on a year-over-year basis. So we had rising earnings at the end of 2016 for the last 6 months and higher interest rates, because the Fed first raised interest rates in December of 15, then again in December of 16, and now in March. So where are we in 2017? Higher interest rates, rising earnings. It's a bullish scenario, but you have to know how to take advantage of that. So let's just look at one chart of the market. This is a one-year chart of the SPY, the most actively traded, exchange-traded fund, mirrors the S&P 500 index. And we've been in a very well-defined trend channel since the July-October period. Now, we broke through the upper trend line back in late January when the market continued the post-election rally. And to measure whether or not these moves are sustainable, I like to look at Chaikin money flow, which is my proprietary indicator that was introduced over 35 years ago. It's on every online brokerage platform. As I said, Reuters, Bloomberg for the professionals, street.com, I'm sorry, stockcharts.com. Actually, Jim Cramer talks about it a lot on Mad Money. But the key here is when institutions are buying the market, they often get a very quick fix equity exposure by buying the SPY, and that's reflected in Chaikin money flow. These big mountains of green give me comfort that when we came down here 2 days ago and tested our lower volatility bands and dropped slightly below this long-term upper trend channel, that we would rise back above it and move on to new highs later in 2017, perhaps as early as mid-April. Now, what's bothering the market is the dissension in Washington, and just as the market closed, it was announced that the vote on the repeal and replace of the Affordable Care Act would be delayed. It wouldn't take place today, and The market had rallied earlier in the day in hopes that it would take place. Now it's being postponed. I don't think this is bearish. I think this will all come out in the wash. Healthcare stocks were down a bit today, but not really very much. So in general, bullish on the market. It's important to have an overview, to have sort of an umbrella under which to operate. So when I'm bullish on the market, I'm looking for buying opportunities. I may also want to put on an occasional put trade or sell a stock short or take profits, take money off the table. But in general, I'm looking to be fully invested in my 401k plan, and I'm looking for bullish swing trading opportunities. One of the problems we all face is that there's so much information. I mean, today's an example of that. The market's being buffeted by the rising prospects for the passage of a healthcare repeal and replace bill, or the negative prospects when it's postponed. So it's important to cut through the clutter. On the right is what fundamental data looks like. Very, very difficult to make decisions based on that. So what we do here at Chaikin Analytics through our 20-factor quantitative model that we call the Chaikin Power Gauge rating is help you cut through the clutter, because it's really important to have a fundamental view on a stock to skew the odds in your favor. So our solution is Chaikin Analytics, which is built around the Chaikin Power Gauge rating and some key technical indicators to help you make more money in less time. And in doing that, Chaikin Analytics gives you an edge. I call that the directional edge. We help combine fundamentals and technicals into a quantitative model and then provide 6 pairs of buy and sell signals for better entries and exits. Now, if you're a Wall Street IO subscriber, you have the benefit of Micah's payday signals and some really expanded signal analysis that he's folded into the Wall Street IO platform in the last 6 to 9 months. But whatever your discipline is, it's very important to have entry signals and the directional edge. Part of what I learned when I ran the options department at Tucker Anthony is that 95% of options traders lose money. And the reason they lose money is they don't understand the importance of a directional edge. It may seem sort of obvious, but most traders don't realize that to put the odds in your favor, you need an informed view of where stocks are going, and we call that the directional edge, and Chaikin Analytics can give it to you. So we talked about having a plan in 2017. A disciplined methodology leads to successful investing and trading. And this pyramid sums up the Chaikin way, if you will. Our disciplined methodology to find bullish and bearish stocks that are likely to outperform or underperform the market. At the top of the pyramid, the Chaikin Power Gauge rating, our 20-factor fundamental model. It's the way you can know the fundamentals. That's the first key that we talked about of an underlying stock before you put on an options trade or a swing trade. At the bottom of the pyramid, 2 technical indicators, Chaikin money flow, which I think all of you are familiar with, and Chaikin relative strength, which is a very visual way to look at how a stock is performing relative to the market. In the middle, the sweet spot are the buy and sell signals. But this can be really simple. If you know with some high degree of probability, and we're going to convince you of that in a moment, that a stock is likely to outperform or underperform the market, you combine that with some reliable technical indicators, and I would add Micah's sort of payday cycle analysis with Heikin-Ashi charts and MACD into that mix. You've got a disciplined methodology, and if you wait for the great setup, your trading results will improve. So at the heart of this is the Chaikin Power Gauge rating. A simple display, but a powerful set of calculations going on under the surface. What I'd like to say is that the Chaikin Power Gauge rating is like a Chevrolet with a Ferrari engine under the hood. And it can also be a GPS for you during earnings season. It can guide your trading in the right direction and at the right time, and we're going to see some examples of that. toward the end of the presentation. Now, John Carter, who is a great trader, that's as terse an endorsement as I could ever give you, looked at the Chaikin power gauge rating and called it an objective, awesome meter for stocks because it combines 20 plus technical and fundamental factors to gauge a stock's potential. So what was it about the Chaikin power gauge rating that got John Carter so excited? Well, it was this combination of 20 factors with a clear, proven record of success that indicates a stock's potential to outperform or underperform the market in time frameworks that are as short as a month or as long as 12 months, as we'll see. And these 20 factors reflect what I learned from the successful institutional investors that I was either working with or who were clients of mine in our institutional brokerage firm. These are the factors that Wall Street looks at every day. The big institutions make decisions based on fundamental factors. They can be quantitative, they can be traditional fundamental analysts, they can focus on one industry group, but in sum, they look at these 20 factors. Now, the model is 85% fundamental and only 15% technical. And it's important to realize that there are lots of different styles and time frameworks on Wall Street, from day traders to swing traders to fundamental analysts to value and growth analysts. So not all institutional investors look at all 20 of these factors, but the reason that the power gauge rating works and has worked for the last 6 years in real time is that it's based on the way Wall Street works. This is your directional edge. So the financial metrics are what a Warren Buffett looks at. The earnings category, and by the way, financial metrics are 35% of our model. The earnings metrics are what Jim Cramer likes to focus on. I boxed in red earnings surprise because we're heading into earnings season in early April, and we already have some positive and negative earnings surprises that we'll be looking at in the course of the webinar. And the reason that earnings surprises are important is because they come in bunches. So you never get just one of them. Someone once said earnings surprises are like cockroaches. There is always more than one. And they lead analysts to raise or lower their earnings estimates. It's been documented in white papers and academic studies that analysts raising or lowering their earnings estimates are the largest contributor to short-term stock price movements. Value metrics like the financials contribute to the long-term movement in stock prices. And then I've also highlighted Chaikin money flow and relative strength because not only do we have those indicators on our charts to evaluate with the power gauge, but they're part of the model. Very important, only 15% of the model, but they keep the model honest. So how has the model performed? Well, in 2016, using the Russell 3000 as a universe, the average very bullish stock, 428 of them at any given point in time, up 32%. The average very bearish stock, because it was an up year, up only 9%. So the difference between 32% and 9.5% is basically the difference between bucking the trends in individual stocks by putting your trades on in the wrong stocks, or making a lot of money by focusing your long trades on the very bullish stocks. Now in 2015, the very bearish stocks were down 18%. And those were the energy stocks and the small caps, the rails that were dependent on energy. So year to year, everything can change, but the key thing that doesn't change is the very bullish stocks, year in and year out, outperform the very bearish stocks. So that's where you want to look for your long trades, and you want to avoid the very bearish stocks. And we're going to show you very specific examples of why and how. Now, final point of validation, we have partnerships with both NASDAQ, where we created 3 NASDAQ Chaikin indices, small cap, large cap, and dividend achiever. And I'm happy to say that after 3 years of outperformance of these indexes, which are rebalanced just once a year. So they're basically buy and hold indices. These indices have been licensed by a major insurance company, and they've registered these with the SEC as exchange traded funds, hopefully be available in mid-May for trading. And then we have a partnership with First Trust Portfolios, who create unit investment trusts. They're the largest creator of unit investment trusts. There's currently almost $60 million being managed in 5 unit investment trusts. They're performing quite well with very low volatility, using the large cap universe, the S&P 500, as the core universe, finding the best stocks in that S&P 500 to put into these 20 stock portfolios, which are also buy and hold. Now, if you're a swing trader or an options trader, you're clearly not buy and hold, but Chaikin Analytics works just as well for you as it does for NASDAQ and First Trust. So to find the stocks that you want to trade on the long side, we've identified a pattern that we call classic Chaikin bulls. First, we want the fundamentals to be in place. That's why the power gauge rating is so important. If you're trading from the long side, you want to be long stocks where the power gauge rating is bullish. If you've got some other fundamental way to evaluate stocks that you like, that's okay. But you want to be trading on the long side in stocks where you're confident that the fundamentals are bullish. You also want to be trading in stocks that are outperforming the market. Otherwise, you're bottom fishing, and bottom fishing is the most expensive sport in the world. I've tried it for years until I developed this disciplined methodology. It works occasionally, but when it doesn't work, it's sleepless nights, it's anxiety, because you're going to lose money. And then finally, Chaikin money flow is strong. That's the third piece of the classic Chaikin bull, indicating that institutions are aggressively accumulating the stock. So here's an example of a classic Chaikin bull. This is AMAT, semiconductor stock. Look at the bottom of this one-year chart, and there's the Chaikin power gauge as a red, green, yellow ribbon, except in the case of AMAT, it's been bullish almost entirely for all of 2016 into 2017. And right above that is our unique way of looking at relative strength. Now, you could go to William O'Neill and Investors Business Daily and see a column of numbers from 1 to 99. In fact, O'Neill has this 80-80 strategy, or 90-90, stocks with strong relative strength and strong fundamentals. Well, that's the same technique, but we've got a more powerful model and a visual way to look at relative strength that doesn't require you to memorize numbers. That contributes, in my view, to information overload. This chart embodies everything you need to know about a stock. The fundamental rating is the power gauge. How it's doing relative to the market tells you what the market thinks. And in the end, the market always wins. So we like the market to agree with the model. And then finally, when Chaikin money flow is mostly green, recognizing that in a normal stock, it can go red on a sell-off. Doesn't have to stay all green, but very often it does, as AMAT did here between the May-September period when the stock broke out of a downtrend in the 22 area and rallied all the way to 30. Those are the three elements of the discipline game plan and what you need to focus on. And then we've got our buy and sell signals on the screen. In this case, we've got our relative strength buy. Now, all of our signals, whether you're a subscriber or a visitor, are on our website, chaikinanalytics.com. We describe the underlying thesis, but the key is that every signal is filtered by something first. So the relative strength signal as a buy can only happen if the stock is outperforming the market. And I'll just tell you how this simple signal, which is so powerful for swing trading, develops. Stock's outperforming the market, it dips under its 21-day average and gets oversold, and then it rises back above its 21-day average. This is a classic pattern that very successful market technicians like Linda Raschke have been talking about for years. What we've done is enhance it by quantifying relative strength and saying, yes, this pattern works, but it works better if the stock is outperforming the market. And it works even better than that if the fundamentals are strong. So this is great for swing trading for a very, very good reason. The signals are accurate about 7 out of 10 times, and they last for 4 to 8 weeks. One of the problems with options traders is they put themselves under the gun by buying short-dated options, typically out of the money, not giving themselves enough time for a trade to play out, or getting out early because these options are ready to expire in a winning trade. The beauty of this relative strength buy signal, when you come back up through that 21-day average, is that these trades tend to play out for 4 to 8 weeks. You very often get 2 cycles of up moves. And Micah focuses a lot of computer power and brain power on quantifying the trading cycles. This goes a little bit beyond that to find you big swing trading cycles. The small ones are profitable, the big ones are even more profitable, and you can see that on the screen. Now, how do you find classic Chaikin bulls? Well, we have a screener in Chaikin Analytics that I'm going to demo in real time toward the end of the webinar, so please stay with us. I'm going to be demoing, as Micah said, our screener and our new stock discovery engine. So right before I finished today's webinar deck, I used the screener to screen for classic Chaikin bulls. I started with the Russell 3000, required that the power gauge rating be very bullish. Remember, those stocks were up 32% last year. And then I'm looking for strong relative strength and money flow. Those are the 3 components of the classic Chaikin bull. I'm looking at large and mid-cap stocks because small-cap stocks have broken down here, and the large caps, as we saw with the S&P 500, have found support. I added one other factor, which is earnings surprise. Remember, I talked about how important that was. They come in bunches, and we're going to see some examples of that. And we ended up with this list of 27 stocks that I'm going to put in a watch list. Now, one of those stocks is Micron, and we have a Micron chart here in the deck, and Micron reported earnings after the close. It was at the upper volatility band, but they reported a positive earnings surprise, and right now Micron is trading up 10% in the aftermarket. So earnings surprises persist, and the reaction to them is very predictable and can be converted into profits in both swing trading using stock or options. So we're going to demo the screener and add another twist to it in a live mode right at the end of the webinar. Now, classic Chaikin bears, just flip it on its head. Power gauge rating is bearish, so the fundamentals are skewed against the stock. Underperforming the market, Chaikin money flow is red, not green, indicating that institutions are selling the stock. And our current poster child for classic Chaikin bear is Under Armour, a stock that is well known, was a darling of Wall Street and the hedge funds, but it's seen better days. And the power gauge rating has been bearish off and on for most of 2016 and for all of 2017. The stock has been underperforming the market since May. How do we know that? The indicator is red, not green. This is very visual. And when you look at the Chaikin money flow, type into your question box whether you think the institutions are buying or selling the stock. Type a big S if you think they're selling, or a B if you think they're buying. And I'm very pleased that everybody is typing in S. And the reason it's so easy to know that is you've got a big sea of red. Every time the stock rallies, institutions use that as an excuse to sell the stock, something they're stuck with. And along the way, there have been some relative strength sell signals. This one worked a little bit, but these 2 were huge winners, and they came ahead of a negative earnings surprise. Now, we know that because we color the icon EPS 4 times a year on the chart, red, gray, or green, depending on whether a stock had a negative or a positive earnings surprise. Now, the reason there's only one earnings report on this is that Under Armour recapitalized. This is a new class of stock, and our database has continuous prices, but the earnings are sitting there under the symbol UA, not UAA. But here's a classic Chaikin bear. The next earnings report is due out April 20th. Our earnings alert indicator says, watch out for another negative earnings surprise. This stock gapped up this morning and then traded down to a new 52-week low before rallying back to the upside. So we're going to talk about playing defense later in the webinar, and this is a classic example of playing defense by avoiding a stock like Under Armour on the long side, but looking for put buying opportunities, and these were wonderful put buying opportunities here ahead of that earnings report. And then there had been a series of negative earnings surprises. There was one in October. You see the gap down. So these patterns repeat. We're going to see that dramatically on something that just happened this morning. So what we've really been talking about is combining fundamentals with technicals. The power gauge rating, relative strength, are a very, very potent combination. We call it the dynamic duo, and it helps find big winners and big losers. And when you combine it with Chaikin money flow, you really have a very simple 3-indicator approach to finding the right stocks to trade on the long side and the short side. That's your plan. That's your focus. Don't be distracted by big shiny objects. Well, gee, Tesla looks like it's moving up here. Well, if it's not satisfying these 3 criteria, don't worry about it. There are so many stocks that do. So here's an example of the dynamic duo. Citizens Financial, in the very strong financial group, which has taken a big hit of a big wave of profit taking in the last 3 weeks, 3.5 weeks. After the Fed raised interest rates a week ago, they sort of indicated that they'd go slow. There'd be more interest rate increases, which are bullish for the banks. So I'd like to focus on the chart here in July when Citizens Financial, which had a bullish power gauge rating, meaning that the fundamentals were favorably positioned, began outperforming the market. That's when you get the dynamic duo in play, and we call this shift from underperforming the S&P to outperforming a bullish personality change. It's a very important concept. And then when you combine it with Chaikin money flow, and again, look at those mountains of green. I don't have to ask you the question again. I think you realize that the institutions were accumulating this stock all the way through the top. Now you've got a little bit of red here, which is not unusual since the stock has been down for almost 3.5 weeks. So there's some capitulation selling going on, and then you move back up today, and hopefully it'll regain this long-term trend line and move back into a bullish position. But notice again how these relative strength buy signals are great for swing trading. They last 4 to 8 weeks. And you usually get 2 or 3 waves to an upper band, and occasionally you'll break through and just keep going. So bullish personality change, very important. Here's an example of a bearish personality change and the dynamic duo on the downside. CocaCola, well-known name, flailing around as a company. Not sure if they want to be a beverage company or a bottling company or be in the snack food business. But the bottom line is you don't need to know any of this because the power gauge rating has been bearish since mid-May. And you had a bearish personality change as the stock began to underperform the market. And there's your dynamic duo on the downside. Now, I've got this yellow zigzag here in mid-December when the stock was trading at 41.5 because in January, Goldman Sachs downgraded Coca-Cola and Procter & Gamble. But they were 6 months late because the power gauge rating had turned bearish in May, actually 8 months late. Here's where Goldman Sachs turned bearish. Great, probably the best research department on Wall Street. Here's where the power gauge turned bearish and the stock started underperforming the market. So you can be smarter than the Wall Street pros if you embrace a discipline like this Chaikin methodology. Now, we've seen this before. No patterns are new on Wall Street. That's a recurring theme of this webinar. Patterns repeat themselves over and over and over again. So here's SunEdison, which was one of the darlings of the solar energy business. They made semiconductors for solar panels, and everybody was bullish on Sun Energy up at $30. Big hedge funds had large positions. Merrill Lynch was recommending the stock, but look at the institutions. They were selling the stock as it was making new highs. Money flow was actually red, and we're going to show you a pattern that we've been teaching institutional investors for 30 years based on just that in a moment. But in mid-July, when SunEdison was trading at about 27, the power gauge turned bearish. It started underperforming the market. There's your dynamic duo on the downside. And look at the institutional selling in the stock. And along the way, we had what we call our money flow sell signals. Now, these are also good for swing trading, but they have a shorter lifespan, 5 to 10 trading days. So ideal for Micah's payday cycles and his Heikinacci charts, because they tend to zero in on those 5 to 10 day cycles. Now, this chart ends in April of 2016, almost a year ago. The reason is that SunEdison filed for bankruptcy. We captured that in a screenshot on CNBC. Merrill Lynch did put out a sell recommendation on the stock in February when the stock was trading at $3, down from 30. And after a Merrill Lynch advisor saw a demo of our system at an options conference in California back there in 2016, he gave us this testimonial. He said, if I had only had Chaikin, I would not have continued to buy SunEdison on the way down at 15 because my firm Merrill Lynch was still recommending the stock. I'd have avoided it and saved a lot of money and pain for both myself and my clients. So this is the value of having a discipline. Now, we've looked at money flow, buy and sell signals, relative strength signals. Our overbought, oversold signals are also great for swing trading because they have that 5 to 10 day time duration as well. So 6 pairs of buy and sell alerts. And the reason they're important is because people tend to buy on emotion. The S&P 500 has averaged a 9.9% gain over the last 20 years, average annual gain. Individual investors have only garnered a 2.5% gain. And the reason is that they buy on emotion. They'll buy at the top and sell at the bottom. We've all done that. I'm sure you have. And you're never happy when you do it. So particularly when you're swing trading, it's very important to follow a disciplined methodology, because to trade more profitably, you need to follow signals that you believe in, so you pull the trigger and take advantage of opportunities. Warren Buffett has famously said you should be fearful when other people are greedy and greedy when other people are fearful. So here's FFIV, and I've circled in green an oversold buy signal that was triggered in Chaikin Analytics based on a 2-day Brexit sell-off. Now, what is the oversold buy signal? This is so simple. The power gauge rating is bullish. The stock makes a new 8-day low. Thank you, Larry Williams, for that. He's been a long-distance mentor to me for 40 years. And the stock gets oversold. It's not meant to pinpoint absolute tops and bottoms, but it very often does, particularly if the market is in the same direction. But the key is it's a disciplined way to enter a trade. And anytime you're trading with discipline instead of emotions, your percentage of wins is going to go up and your trading profits are going to multiply. So we have an easy way to find these signals in Chaikin Analytics. You create a list, called My Stocks, or you go to look at the S&P 500 or an industry group that you like the financials and the banks. And then you go to our alerts window. And this morning, when I opened up Chaikin Analytics, I saw buy signals on about 7 stocks out of the 150 or so that I follow. Way too many for you, but I do these webinars and write a market letter. And right at the top of the list was United Health with an oversold buy. That means a new 8-day low, pinpointed on the chart, in a stock with a bullish power gauge rating. Now, we had been using United Health as a poster child for a classic Chaikin bull, but because we got this signal, I flipped it around a bit, put AMAT in that slot, and used United Health as an example of how a disciplined methodology can lead you to a very attractive swing trade. Now, I said these trades work about 2 out of 3 times. The relative strength works 70% of the time. So here's a winning trade right here. It's a beautiful 10-day swing trade. This trade worked briefly, and then this one, because we ran into that January swoon, was unprofitable for a bit, but then the earnings came out, and notice this string of positive earnings surprises. Patterns repeat on Wall Street. There's never just one earnings surprise. We're going to see a really dramatic example of that in a minute. And you had your oversold buy signal. Now, here's something that we didn't advertise on the webinar. It's a winning trade that we've been teaching to institutional investors for over 30 years. And it's a trade that 95% of investors never see. We call it a bearish Chaikin money flow sell alert. Now, how does this trade trigger? Well, when a stock rallies to an upper volatility band, as Intel did, we're looking at a 1-year chart of Intel and Chaikin Analytics, and money flow stays red or negative, what is that telling us? It's telling us that the institutions are selling the stock when the public is buying it after an earnings report. Be fearful when other people are greedy. So if you had followed the discipline right after that earnings report, you could have been selling Intel in the 37.50 area, and Intel has not recovered since that sell signal. This is one of the only indicators I know that can at times get you out of a stock at its all-time high or at a 52-week high. Now, we actually identified a series of semiconductor stocks that all had the same pattern in January. Intel was one of them. That was a terrific exit. Micron was another. Right after an earnings report just 3 months ago, Micron did just what it's doing now in the aftermarket. Micron's now up 11%. It's trading at 29.34. But Micron spiked up, as it will tomorrow morning, 3 months ago to the day, and money flow was negative, not positive. It was red, not green. That's your bearish money flow sell alert. So you could have gotten out of Micron at 23. In fact, I think my wife Sandy did, because she owned it. And she's the poster child for how someone without a Wall Street background can make money with a simple discipline like Chaikin Analytics. And she actually gives webinars. I think she presented the last one to the Wall Street IO community. But with Micron, we had a totally different picture than we did with Intel. With Intel, the power gauge turned neutral after that sell signal. With Micron, it stayed bullish, and we were fortunate enough to get an oversold buy signal, a new 8-day low with the power gauge bullish. So even if you had taken your profits off the table on Micron, you had an opportunity to get back in. So the stock, which was trading at 26.34 in midday when I took this chart today, already up 1% on the day, is now trading at 29.40, up almost 3 points in after hours trading. But look how the discipline gets you into trades at the right time when people are fearful, instead of having to chase them as traders are going to do tomorrow morning. Now, you can be pretty sure that this stock is going to open up above 29 tomorrow. And if you buy it at that exalted level, the odds of making money on that trade are pretty slim, because typically when a stock spikes up above the upper volatility band, it goes sideways to down for 3 to 8 days. So anybody who buys on the opening tomorrow is probably going to be sitting on a losing swing trade. On the other hand, if you had followed this second oversold buy signal, you might still be long the stock. You might have taken it off the table, but knowing that they were due to report earnings after the close on March 23rd, and we put that right on the chart, and that our earnings alert indicator was bullish, suggesting that there would be a positive earnings surprise, you might just have stayed with the stock. And that's why we're going to end the webinar by focusing on how you can make money in earnings season, or at least the formal part of the webinar. So let's talk about playing good defense, because too many webinars like this focus on the long side and how to find winning trades. But playing good defense means avoiding losing trades and can lead to good offense. The way it leads to good offense is by identifying stocks like Chipotle with a bearish rating that are underperforming the market. There's your dynamic duo. But this chart is from September of 2016, and it's a chart I used in the last webinar that I presented to Wall Street I/O. We pointed out at the time that the power gauge rating had gone bearish at about 690 on the way to 380, that there were some wonderful put setups. Notice the relative strength buy signals, in this case it's the relative strength sell signals, last for 4 to 8 weeks. They're great swing trading put setups. So this is September when the stock was trading at 418. We've now had a huge rally in the market, and guess what? Chipotle is still trading at 418. So from this point in September, when we used the chart on a Wall Street I/O webinar, the stock has gone nowhere. But a lot of people have been bottom fishing or following recommendations on CNBC that the company might be turning around. It's not happening. Will it turn around someday? I don't know. Are people going to go back to a taco restaurant that's had health problems? Pretty tough to turn the ship around. But by playing good defense, number one, you're avoiding Chipotle on the long side. You're not going to bottom fish, but you're looking for put buying opportunities, or opportunities to put on a put spread, because very few people like to short a $400 stock. Requires a big margin account and unlimited upside, whereas a put spread, a bearish vertical put spread, has limited risk and tons of potential if you time it right. Now, here's another stock where you could have been playing good defense in 2016, Tripadvisor. Notice how the power gauge rating, just as with Chipotle, was bearish all through 2016 into 2017 and beyond. Stock was underperforming the market. So you've got the dynamic duo, which is weak, and the institutions were selling it. And right ahead of this earnings report in November, we had what we call a reversal sell signal. You can go on our website and see what that's based on, but you had a negative earnings surprise. It was the third one in a row, and the stock spiked down from 63 all the way to 45. Pretty good swing trade. And yet again, in February, another negative earnings surprise. They come in bunches. That's why earnings surprise is one of the 20 factors in our model. And once again, you gap down. Now we're going to show you, when we do a live demo of our discovery engine, how you could find a substitute for Tripadvisor or stocks that are similarly bearish. And now we know that the earnings report that's upcoming will be on May 3rd, and the likelihood is yet again for a negative earnings surprise. Now, earnings season is really what I consider to be a season of opportunity for options traders. A lot of people are reluctant to trade during earnings season because stocks are volatile. So we know from asking questions on these webinars. In fact, let me ask you the question: are you comfortable trading ahead of earnings? Type C for comfortable or U for uneasy. And I see that there are a lot of people who are uneasy trading during earnings season. That's why I called the power gauge rating a GPS during earnings season, because it finds stocks that are likely to report positive or negative earnings surprises. Stocks with a bearish power gauge rating are twice as likely to report a negative earnings surprise. Stocks with a bullish power gauge rating are almost twice as likely to report a positive earnings surprise. So you can make money with options, predefined risk during earnings season by letting the power gauge and past earnings reports be your guide. So there's a lot of speculation in the media about whether earnings are going to be positive or disappoint. And the power gauge rating will help you know whether a stock is likely to outperform or underperform. And here's an example of that from this morning's trading. PVH Corp, which had a very bullish rating and a series of positive earnings surprise, has been under pressure recently. This is Calvin Klein jeans and Phillips Van Heusen shirts and a lot of basic apparel, Tommy Hilfiger. But it's been under pressure for reasons that really are speculative. Is there going to be a border tax, which will hurt companies like PVH? Is conventional retailing going out of business because of Amazon? For a whole series of reasons, this stock has been weak and underperforming the market. But look what happened this morning. A positive earnings surprise, and the stock gapped up 8%. It's the fourth positive earnings surprise in a row. But with a little bit of irony, just a year ago when I presented again to Wall Street I.O., Mike, it seems like I'm always presenting to Wall Street I.O., we used PVH as an example. Notice this news article is dated March 22nd, 2016. And the headline was, PVH closed down ahead of tomorrow's earnings reports, just as it did yesterday. And Jim Cramer said, exercise caution with PVH ahead of earnings a year ago. And look what happened. Exactly what happened today. PVH reported better than expected earnings on March 22nd, 2016, and the stock spiked up 8%. But most of that was in the pre-market, so you didn't have a chance to take advantage of that. It's exactly what happened this morning. Patterns repeat on Wall Street. You got a series of positive earnings surprises. So even when the stock is trading poorly, you can get a positive earnings surprise, and the power gauge rating will help you stay out of trouble. You wouldn't be shorting this stock ahead of earnings because the expectation is a positive earnings surprise. Now, Under Armour, which we have seen as a classic Chaikin bear, is another example of signals ahead of a negative earnings surprise. So earnings season can be very profitable if you have a directional edge, and that's what the power gauge rating does for you, and the signals. Now, very dramatic example of what you can do with options during earnings season goes back to October of 2014, where Netflix, before a 7-for-1 split, had a bearish earnings report, and we had an overbought sell signal, a new 8-day high ahead of that earnings report. People who bought out of the money options made over 50 times, but someone who was a little more sane, JV, who was an old Apple trader community member, gave us this testimonial. It sort of shows you how long the relationship between Wall Street I.O. and Michael Lamar and Chaikin has gone on. This is almost 3 years. I've been an Apple trader and decided to add Chaikin Analytics to my resources. Using the upcoming earnings ideas in Chaikin, Netflix had a bearish rating, bought 3 put contracts before earnings on 10/15 for $22.20, sold them the day after for $93.90, a quick $21,500 profit. This is 2.5 years ago, and these patterns happen over and over and over again. If you follow the discipline of the power gauge rating and a signal ahead of earnings, you're going to have a much higher probability of success and occasionally make outsized profits like this. Now, we have a new product called our stock discovery engine, which helps you find profitable stock ideas. And what I'd like to do now is to go to about a 10-minute live demo of our stock discovery engine and our screeners. So I'm going to share my desktop. Going to maximize it. Now, Joe, is everybody seeing that screen? I know I've occasionally
Yeah, we see your screen right now. We have the screener up, your 27 results. I think you're good to go.
Thank you. So this is the screen that we showed you right after the classic Chaikin bull section. This is our screener tab. We started out with the Russell 3000 to find classic Chaikin bulls that had a pattern of positive earnings surprises. So you saw this screen already. Notice that Micron was one of those stocks. But I'm now going to add a new twist. So here we were looking for very bullish stocks in the Russell with strong Chaikin money flow and relative strength that had a pattern of positive earnings surprises. 27 names out of the 3,000 in the Russell. But I'm going to add one more condition. I'm going to require that the stock be oversold, and I'm going to rescreen, and we're left with just 5 names. So we've narrowed the Russell 3000 down to 5 actionable candidates. 2 of them had buy signals that triggered in the last 2 days. So I'm going to go click on results, which enables me to look at these 5 stocks in our workspace, and click on Bunge. And there's a relative strength buy that came on top of an oversold buy. The stock is oversold, very positive money flow, bullish power gauge rating, outperforming the market. And at the bottom, I can see that the reason that this stock has been selling off is that a brokerage firm downgraded it to neutral. That typically happens when a stock has had a big long run and they view it to be fully valued. So I've gone from a screener that had 27 names in it to one where there's 5 ideas, and I've zeroed in very quickly on one that's actionable. So you want to be buying this stock if you're following this discipline based on that. It could have been American Financial with an oversold buy signal. 8-day low, oversold, bullish power gauge rating. Very, very easy to go from the screener to an actionable swing trading idea. Now let's take Tripadvisor, which we looked at in the section on playing defense, and we see that the stock is still bearish. So now we're going to go into our new discovery engine. Now what the discovery engine does is it finds stocks like the symbol that you enter into the symbol entry box. So similar stocks, it functions in a similar fashion to how Netflix and Spotify find you movies and music that you're going to like. So we're going to type TRIP into the stock discovery engine, and the first line is going to be stocks that have bearish ratings, very bearish ratings, in the non-food wholesale retail sector. These are the 2 most important points of relevance. This is known as a relevance-based discovery engine. That's what Amazon is, or Google. It's what Spotify and Netflix are. So we've got 5 stocks, if we're looking for potential short candidates, all in the same sector as Tripadvisor, Wayfair being an internet e-commerce site. But we also have the second set of ideas being potential swaps. So if you like the internet and you're trying to find a bullish stock that's involved with the internet, you've got eBay and then you've got IAC Interactive. So I can actually tab over that and see what factors triggered this as a potential swap. So non-food wholesale retail, same sector. Mid-cap stock, same as Tripadvisor. Strong earnings surprise factor, we like that. We know why that's important. And strong relative strength. So by clicking on this, I get taken back to the workspace, and I'm looking at IAC Interactive, and I see that it's just coming off an overbought, still barely outperforming the market. Power gauge bullish, it's holding support. It's doing better than most mid and small cap stocks. So this is a potential swap candidate. If I'm in Tripadvisor and I'm hurting, I might want to swap into IAC, or I may want to start monitoring this for a long entry point. Love to see it come down a little bit and test that long-term support line. And then finally, let's look at Under Armour, which we've already identified as a bearish stock. We can see it right here. Then we go to the discovery engine, and we're going to type in UAA. And now we're going to see other apparel stocks, mid-cap apparel stocks with a bearish rating. Hanes Brands, Lululemon, VFC, G3. But on the next line, again, we've got potential swaps. And in this case, I'm just going to click on potential swaps, and all of the 15 stocks, because we only show 5 at a time, are going to show up on the workspace, the chart panel. So Skechers was the first stock. So I want to look at that first, and I see that, yes, the power gauge is bullish. It's been outperforming the market, but look at Chaikin money flow. 2 examples of that bearish Chaikin money flow alert. So I'm going to pass on Skechers as a potential long candidate, and instead I'm going to look at Senta, which my wife Sandy has owned off and on for the last 9 months. And now I see a stock that I actually like. Everything is in here. It's all lined up, what Warren Buffett calls his fat pitch. Bullish power gauge rating, outperforming the market. Chaikin money flow is very strong. What we're missing here is an oversold buy signal. And notice how these oversold buy signals are very, very good swing trading entry points. So this one is really holding support, and I'm going to put this on a watch list and look for an entry signal. That's how easy it is to find actionable ideas using Chaikin analytics. So that's just a tiny example of this easy to use functionality that helps you find swing trading ideas in less than 15 minutes a day. So now I'm going to go back to the presentation and make you a very special offer. That's where we ended up. So Chaikin Analytics for both iPad and desktop has our Options Play Ideas module, which we didn't have time to get into today. Our screener, earnings alerts, news, intraday charts, and now the new stock discovery engine. John Malden, who is not a trader, he's a big macro guy with 2 free weekly newsletters that a lot of the institutional investors read. Over 750,000 people read his weekly newsletter, has also gotten enthusiastic about Chaikin Analytics. In fact, his team backtested it on all their recommendations going back over the last 5 years, and they determined that this was such a powerful tool that they've integrated it into their routine due diligence process for vetting and evaluating investment ideas in their paid newsletters. So Chaikin Analytics is normally $1,950 a year, but as a webinar special to the Wall Street I.O. community, we'd like to take $200 off the annual subscription price, reducing it to $1,750. Go to chaikinanalytics.com/better. And this offer expires Sunday, March 26th. Now, Joe Bicella in a couple of minutes is going to put up the link. You can click right into our fulfillment page populated with the discount, or you can call the number on your screen or email sales@chaikinanalytics.com. Now, when you subscribe to Chaikin Analytics, you get a lot of added value. You get small group tutorials. We call them onboarding sessions to help you understand all the features and the benefits of using Chaikin Analytics. We have them every day at 2 o'clock. Joe Bicella and his customer success team, Michelle and Josh, are there to help you become a better trader. In addition, you get my colleague John Schlitz's Daily Morning Insights, comes in your email box before the opening, so you don't have to stay glued to CNBC while you're enjoying your morning coffee, because John will tell you everything you need to know about what happened overnight in Asia and Europe and what's likely to happen today. And then you get my weekly Market Insights newsletter with my stock of the week and our group and sector analysis, plus my view of where the markets are headed. Now, as an added incentive to get you on board and trading with this very disciplined, focused methodology, which we think is a great complement to what Mike is doing at Wall Street IO, we'd like to take an additional $100 off the price of Chaikin Analytics if you subscribe by midnight tonight. ChaikinAnalytics.com/better. And for the first 10 people who subscribe tonight, you'll get a free half-hour telephone consultation one-on-one with me after you've gotten onboarded. So before we swing it back to Joe Bicella to wrap up the webinar and click through to that link, Micah, I'm going to turn it back to you for any final comments.
Great. Hey, Mark, thank you so much. I've got at least a page of notes here from some of the stuff you covered today. Really great job. I really love your new discovery engine. I think it really helps kind of take that whole researching process down to just a very, very quick process for people. And I really love what you said about when you kind of mentioned Warren Buffett and you kind of talked about the fat pitch. The idea of, I call it probability stacking, but the idea of taking multiple things and when they all kind of stack together, you've got this opportunity for, a home run. I love that. And really there's no better platform than what you've created here for doing that, because it makes it so easy for you to see. There's no reason why you'd ever want to, own a stock that isn't part of your suite here that says, hey, look, this is a really great stock because the power gauge is bullish, the money flow is bullish. All of these indicators that we're using that combine to the 20 indicators that you use that combine to make the power gauge, they're all kind of giving you the thumbs up on it. And I really think, again, it helps all the time that you could be out there researching and guessing and trying to go through all this data out there and sifting through, basically getting analysis paralysis. And it distills it all down to a really, really simple thing to understand. And I really have to congratulate you on what you've done here. I love it. And for everybody listening, I've actually been a Chaikin Analytics subscriber for a few years now, and it's basically my go-to thing for anything fundamental analysis. And now with the inclusion of some of these new tools, it's really a dynamite platform.
Well, Micah, thank you very much. And I might point out that Micah is the classic example of someone who's time challenged. He was fortunate enough just a year ago to have his wife give birth to twin boys. And he doesn't have enough time to do some of the research that the power gauge rating does for him. He's time challenged, as he said on our webinar Tuesday night that he gave to the Chaikin Analytics community. If you're time challenged, or if you want to just be doing a lot of different things in your life, Chaikin Analytics is really for you. So with that, Joe, I'm going to turn it back to you. And if you could put up the link and wrap up the webinar, tell people about what you do at Chaikin, I think we're done.
Awesome. All right, guys. Well, thank you everybody for coming out for our webinar tonight. Just as Mark mentioned, I just sent this out to everyone in the chat room. Hopefully that's blinking on your page right now. ChaikinAnalytics.com/better will take you right to the fulfillment page that Mark mentioned. You will see the discount code automatically applied, which is great. Again, $300 off. So that's a full year's worth of access to Chaikin Analytics. I saw a lot of you asking about support webinars and one-on-ones that we offer, and that is all included in the offer that Mark mentioned here. We have one more webinar this week that we're hosting. It is our onboard session, and this is critical for each one of you. This brings you up to speed on our program and shows you the functionality that caters most toward your strategy. I know today we're talking a lot about swing trading, and we absolutely have a lot of functionality that helps there. If any of you also happen to have interest in longer term strategies, we of course cater to that as well, and you'll see how all of that works on the onboard session. So it's Thursday afternoon. Absolute great offer on the table to join Chaikin Analytics for a full year, and we'll have you register for tomorrow's onboard session to bring you right up to speed and get you going. ChaikinAnalytics.com/better, or you can give us a call. Again, our support team is sticking around. I know some of you had specific stock questions. You want to take a look and see what our program says about, I saw there was a request for Amgen, for Micron. Give us a call right now. We'll do a live demonstration with you to show you what it looks like in the program, 877-978-6257. In the meantime, everybody have a wonderful evening. We will see you tomorrow, and keep an eye out for the recording as well. Have a great night.